warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I'm Grace Agbarago. It's Wednesday, the 12th of November. We thank you for joining us at this time on the show.
Let's tee off with your news now. The International Energy Agency has released its World Energy Outlook today, citing global oil and gas demand could continue growing until 2030, driven by strong energy needs and expanding LNG capacity, even as the world remains off track to meet Paris climate goals. Let's listen to IEA Executive Director Fatih Birol speak on the findings.
When we look at our data, there are many things, the concentration that makes us worried. At the IEA, when it comes to energy sector, we believe concentration is not good, diversification is better. So therefore, especially in the refining of the critical minerals, we see a major concentration. Maybe one number from our report, and this is again in our databases, rare earth elements, a topic which is a lot in the newspapers, in the discussions, in the government agendas today. Today, rare elements, the 91% of the rare earth elements refining is happening in one single country. And seeing this big challenge, many countries push the button. A lot of rare earth elements refining projects are now in the pipeline. And when we look at all of them, we have all of them in our databases. When we look at all of them, when will they finish, which stage they are? Even if we assume all these projects have started or planned, are implemented successfully, this 91% of the share of one single country in the rare earth elements refining will go to 75% only in 10 years of time. So from 91 to 75% in 10 years of time, still a big concentration of rare earth elements refining in one country.
In Uganda, S&P has revised the nation's outlook to positive from stable, while affirming its B-B rating, citing resilience growth, higher FX reserves of $5.4 billion in September 2025, and a narrower trade deficit of 4.2% of GDP. While GDP expected to average 6.4% between full year 2026 and full year 2028, the World Bank's resumption of $2 billion in project lending and lower election-related fiscal risks, Uganda's prospects for a future B rating continue to improve. In South Africa, Vodacom Group has signed an agreement with Elon Musk's Starlink to provide high-speed, low-latency broadband internet for businesses across Africa. The partnership will enable Vodacom to integrate Starlink's low Earth orbit satellite technology into its network and authorize the telecom giants to resell Starlink equipment and services on the continent. The move is aimed at expanding connectivity in rural and hard-to-reach areas where traditional tower deployments remain costly and challenging. In central banking news, Zambia's Monetary Policy Committee has cut the country's key lending rates to 14.25% from 14.5%, the first rate reduction since August 2020. Central Bank Governor Denny Kalialia announced the decision in Lusaka, citing expectations that inflation will continue to ease in the coming months. Here are excerpts.
The Monetary Policy Committee at its meeting 10 to 11 decided to reduce the monetary policy rate by 25 basis points to 14.25%. The committee took into account that inflation has declined further in the third quarter and the projections indicate a faster deceleration towards the lower bound of the 6 to 8% target band over the forecast horizon. The committee was also mindful that inflation still remains above the target band and market expectations of inflation, although lower this time, remain elevated. So now let's see what exactly we are talking about, inflation decelerating. So what we observed is that the downward trajectory in inflation accelerated in the third quarter, with inflation declining to 12.3% in September from 14.1% in June. Go for more information here on table 1. This is the usual table that we share. It's divided in 2 parts, as you may recall. The first part, the upper part, is average, and the lower part, we are talking about the end period figures. So if you look at the upper part, overall inflation declined from 15.3% in the second quarter to 12.6% in the third quarter.
Zimbabwe's largest beer and non-alcoholic beverage producer, Delta Corporation, has announced a robust profit growth of 82% for its half-year ended September. The listed brewing giants reported a revenue growth of 32% to $514.3 million at half-year. Operating income growth of $99.8 million was a 54% jump on a year-on-year basis. Delta Core earnings also shows earnings before interest, tax, depreciation, and amortization, or EBITDA, was an increase of 51% to $112.4 million. The ZSE listed company announced a 0.02 US cents per share cash dividend to shareholders. In South Africa, the South African Reserve Bank, in collaboration with the Bank for International Settlements, announced the winners of the 2025 G20 Tech Sprint Challenge on Trust and Integrity in Scalable and Open Finance. Let's now listen to Lesetja Kganyago, Governor, South African Reserve Bank.
This G20 Tech Sprint is based on 3 of these problems. The first is digital identity. We need verifiable privacy-preserving technologies to establish trust among financial institutions and enable broader financial participation. The second is credit data portability. We need secure consumer concerted data exchange solutions so credit data can go to work and improve access to finance. And the third and last is fraud and cyber risk mitigation. We need payment efficiencies that are matched with technologies to significantly reduce fraud and cyber risks. Here at the South African Reserve Bank, we value innovation, but we also know our space. As central banks, we are not quite innovators. We engage with innovation. At the same time, we appreciate that innovation is really driven by established institutions. Our comparative advantage is really about managing the macroeconomic and regulatory environments in which households and firms can thrive. Innovation, by contrast, usually comes from different teams having the freedom to experiment. Often they are working in labs or even garages rather than towers in capital cities. Innovation means taking risks, trying out different ideas, and being open to unimaginative concepts.
Finally, on News Now Today, the Industry Insurance Workshop on Growing the Market, Embracing the Future took place on Tuesday in Ethiopia. Leaders from across Ethiopia's insurance ecosystem gathered to examine the sector's rapid expansion and the reforms shaping its next phase, including a nearly 50% surge in premiums, stronger regulatory oversight, and the rise of digital adoption. Here are excerpts.
The Ethiopian insurance market has seen remarkable growth, and that is a reflection of rising economic activity, broader asset coverage, and premier adjustments, as well as the gradual modernization of the regulatory framework. Yet, penetration remains low, and millions of Ethiopians, farmers, families, and small businesses remain exposed to risk that insurance could mitigate. Our gathering today is a response to that challenge. It is not just about acknowledging the gap, but about bridging it. This workshop, co-designed with the Association of Ethiopian Insurers, FSD Africa, Centfree, and industry leaders, is a platform for practical action, combining strategic vision and with operational insight. This is a moment where global expertise meets local ingenuity. This morning, over 150 leaders are joining for strategic discussions this afternoon and tomorrow. A focus group of senior executives and technical specialists will dive into hands-on exercises. We will explore risk-based capital, market opportunities, and product innovation such as parametric agricultural insurance, microinsurance solutions, and the emerging Takaful sector. We will see innovation in action through InsurTech demonstrations and discuss ways to channel premiums into capital markets for a better return. Most importantly, we will collectively begin shaping a living industry roadmap that reflects the realities, challenges, and ambitions of Ethiopia's insurance sector.
I am Melissa Enoch, and that's it on News Now this Wednesday. The show returns shortly with Grace at the FMDQ archives with our Markets Round. Stick around. We are here at Africa Energy Week in 2025. First day of the event is booming everywhere. A lot of people, many stakeholders from the energy value chain.
We're here to promote the need for investments in a robust downstream sector to truly have energy security for the continent.
welcome back to Money Moves. Let's now go over to Grace for today's market review. Hello there, Grace.
Thank you, Melissa. Let's now take a look at how the markets traded today, starting off with the equities. In Nigeria, the NGX rebounded 2.88%, recovering from Tuesday's losses. The Barrier of Rem was little changed at 0.02%, down to 337.58, while the Nairobi Securities Exchange slipped 0.97%. In South Africa, the Johannesburg Stock Exchange rose 1.04%. And in North Africa, the EGX 30 closed on the negative, down 0.08%. Let's do a quick round on some of the Pan-African currencies. The Rand firmed 0.64% to 17.05, while the Egyptian Pound edged up 0.10% to 47.23. The CFA franc and Kenyan shilling were steady at 566.59 and 129.20 respectively. The Moroccan dirham gained 0.26% to 9.29, while the naira slipped 0.15%. Let's switch into the commodities data deck, beginning with energy prices. Brent crude fell 0.97% to $64.53, and WTI lost 0.97% to $60.45. Natural gas dropped 1.36% to $4.50, while Arabian gasoline eased 0.33% as of 12:58 GMT. Now, finally, two soft prices. Cocoa climbed 1.53% to $6,020, while coffee declined 1.87%. Cotton slipped 0.94% to $64.76. And palm oil dropped 2.67% to $956.61. Sugar was marginally higher, up 0.07% to $14.26 as of 13:03 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Thank you very much, Grace, for those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.